thank you for being here, and I would acknowledge the support of TIAA for this event as well on behalf of my colleagues. And my hope is we can talk a bit about the retirement crisis. I know there's a tendency to despair when you're talking about a crisis, so talk about some solutions to that, potential solutions to, and then kind of end talking about the economy and this moment. Reading up on this, reading into this, the statistics are so staggering. Torsten Slok, an economist at Apollo, had a note this week. He said 50%, almost 50% of Americans have nothing saved for retirement. So let's start, if we could, just by talking about the contours of this crisis the country is facing, how sobering it is when you look at it headlong.
Yeah, well, it's great to be here. We do have a retirement challenge in our country, and to set the frame, and then I'll offer some solutions. We know that today 40% of all Americans run the risk of running out of money. We know that women retire with 30% less, but live longer. And we also know when you look at diverse communities, the stats are even more staggering. We know that today 11,000 people are hitting the retirement age every single day, and that will continue. And that's on a backdrop of a $4 trillion savings gap. And so when we think about the problem, I would frame it in three ways. First, we have a savings gap. We know that Americans are not saving enough. And you even mentioned, as you even think about just everyday savings, most people run out of money for basic needs. So we have to address the savings gap. What that means is that for employers, there's a tremendous opportunity to make sure that you're auto-enrolling everyone, that everyone in the workplace starts with that retirement plan. And we would suggest auto-escalation, so that if you started enrolling and you could not provide the maximum amount of your benefit, but every year you just increase a little. Within that, you have the ability to opt out if there is an issue, but the most important thing is the next year we will opt you in. The biggest risk when I think about having people opt in and opt out and not be able to go back in is that one emergency moment where you may have had to reduce your contribution. If you don't opt back in, or you don't have a system that makes it easier for you to opt in, that one situation in life could then result in 20 years of losing compounding interest, 20 years of not being able to accumulate, and that one moment actually has real ramifications when you're ready to retire. So for savings, we need to make sure that people are saving, but they're saving enough. Secondly, there's an access gap. We know that 57 million Americans do not have access to a workplace retirement plan. And so it's very important that we work with respect to good policy to make it easier for small businesses to be able to offer retirement vehicles without it being a burden, without it being complicated, so that people can get on a path to a secure retirement. And lastly, we have a guarantee gap. You know, we know that Social Security is not sufficient. Social Security was never designed to be 100% replacement of income. We know that in the 70s, when inflation was high, we had pensions. Pensions was about 70%. And so Americans had access to a pension, and they had access to Social Security, and they had access to their overall saving vehicles. Today, that number is 12%. And so when you think about 12% pensions, when you think about Social Security not being sufficient, we have a guarantee gap. And so we believe at TIAA that it's really important to have insurance as part of the allocation. That's a nod to our heritage and what we've been doing to serve people like your dad over the years. What does that mean and why? With having insurance within a retirement plan, you have exposure to equity so that you can get the alpha. You have exposure to bonds. But what insurance will provide is it will protect you with respect to longevity risk. People are living longer, and you cannot know the magic number on when you will leave this world. So having confidence that your income will be there is important. Secondly, it addresses the market volatility. It gives you that safety net. So regardless of what's happening in the market, you can count on it, and you don't have to maybe take out some equity exposure at the wrong time in order to give you income. The bottom line between access gap, savings gap, and guarantee gap, the punchline for retirement is that income has to be the outcome. Social Security is not enough. We have to work together in both a private and public way to make sure that we can design great policy, to make sure that the private sector is doing our part, educating our employee base so that people can feel confident in the accumulating years, but as importantly, when they're ready to decum, they can be sure that their retirement will be there and that they won't outlive it.
I want to ask you about young people in particular.
Yeah.
So we're at a moment where so much of what was attainable or seemed attainable doesn't seem that way right now. So it's hard to look far into the future when you look at the cost of college and it's so expensive. Buying a house seems more difficult than it has in the past. How do you message to or convince young people that they need to think beyond those things when there is such difficulty really kind of getting those things in the more immediate future?
No, it's such a great question. And, I get the benefit of visiting a lot of universities across the country. I have my own sample size with my own children. And so you're right, there's real everyday pressure when you think about the burden of student debt, when you think about access to buying a home and the way interest rates are, the cost of home ownership, when you think about all of the burdens that our younger generation is facing. But I would also say is that our younger generation are dreamers. What I would also say is that when I talk to young people, and if I ask them what are their hopes and their dreams, they want to be able to have those basic things, but they also want to make sure that they're self-sufficient. They want to make sure that they're not transferring debt, but they're transferring wealth, which may not have been available for them with their parents. And so what I like to talk about is a few things with young people. One, I talk about that very first job. When you get your first job, max out on your 401k plan, unless you're comfortable with that benefit staying on the sidelines because you don't need that extra income. Two, you want to educate them about the importance of tax benefits and how, when you are contributing, what that benefit is and how that's working for you. And then I would say to young people is that it is so important that as you're preparing for today, you must prepare for tomorrow. The worst time to think about retirement is when you're ready to retire. The most important thing is to start early so that you can get the accumulating, the power of compounding. And so that when you are older, you will have optionality to be able to design your next chapter. But you have to start in your 20s and in your 30s. The worst time is in your 60s and your 70s. And I will tell you that when you connect with young people, they are listening. I think it's the responsibility of us to make sure that we're communicating in a way that they can receive the information, in a way that they can understand the burdens that they have today, but also giving them practical steps and solutions to be able to save for tomorrow. So yes, there's a lot for our young people to contend with, but I think there's just a tremendous opportunity for us in the private sector to educate them, to make sure that we make it as easy as possible for them to take advantage of retirement benefits, and to make sure that they can feel confident that in their chapter in life, that will come faster than they think. They'll be very well prepared, and they're not transferring that to their children. I think the other thing I would say on that is we're living in a time where you have so much intergenerational. And when you think about today, so many of us are feeling that squeeze. We are in a position where we are taking care of mom and dad. Mom and dad may no longer live in the same household. We are also raising young children. So while we are trying to make sure we're taking advantage of 529 plans, while we're trying to make sure that we're taking care of our basic needs and buying a home and buying a car and helping our children save, we are also burdened with taking care of our parents. And so I do think that making sure that we can have those real conversations with our young people so that they can have a better circumstance than we did, I think is really important, especially as pensions are no longer there to provide that safety net.
A minute ago, you talked about annuities, and I remember when I was starting out in my career, they had a bad rap.
Yeah.
They could be complex, the fees could be high, there was just kind of a general sense of confusion about what they would be. I'd love to get your sense of how much that's been streamlined, how much you think the conversation surrounding them has changed, and also how you balance this notion of the benefits of having a kind of a simple process for retirement with optionality. I imagine that's something with which you have to kind of struggle day in and day out.
Well, the good thing is TIAA has been in this business for over 100 years. And to just take a step back, TIAA was founded by Andrew Carnegie, and he saw that there were thousands of professors that were educating the world's most brightest minds, but were retiring in poverty and not with dignity. And this was before Social Security. And so in effect, TIAA created the first fixed annuity to make sure that there could be income that professors could have access to after they educated so many brilliant minds. And then we rolled out a variable annuity to make sure that we could keep up with inflation and get exposure to markets. So we have been in the business of guaranteed income for over 100 years. And I can tell you that not a day goes by that I hear from either a participant or a family member that says, thank you. My dad is now 90 years old and he's still getting that check. My mother is 80. her husband passed away, and she's still able to get that check from TIAA. So the point is that that guaranteed income was an annuity. It was in their retirement plan. And so when I think about where we are today, you're right, there's so many permutations around annuities, so many different flavors. And so we as an industry have to make sure that we can simplify it, or that people are clear on what it is that they have and what it means. So there is work that we are doing. But when I think about annuities within your allocation, it is not complicated. It is, you have exposure to the stock market, you have exposure to bonds, and then you have exposure to insurance. It's simple, it's part of your retirement allocation. It's different than a retail annuity. I think the most important thing is to understand what it is and what it's not. An annuity is not exposure to equities and alpha. Annuities give you longevity protection, it gives you consistency, and it gives you the confidence that you can have income that you won't outlive. And I think that in this environment is so important that we talk more about annuities, make sure people understand it, continue to do our job to simplify it and make sure people are educated around it. But providing access in retirement vehicles is what we've done for over 100 years in the 403B market, and we most recently have rolled it out in the 401k market.
So going back to 1918 and that initial $1 million contribution from Andrew Carnegie to where we are today, the company has grown tremendously, oversees $1.3, $1.4 trillion worth of assets. Can you just talk a bit about that investing strategy you were alluding to it just a moment ago? It strikes me as it's kind of very lowercase c conservative. There's not a lot exotic about these main portfolios. Could you just talk about the company's approach to investing?
Well, for us at TIAA and Naveen, we are liability driven. We want to make sure that we are investing in a way that our participants can feel confident that 20, 30, 40, 50 years from now, that the money will be there, it will be well invested, and they will be able to have income that they cannot outlive. And so when we look at what we're doing, we have our general account. We also, with Naveen, have third-party assets. And what's important there is whatever returns that we're getting from Naveen, that ultimately goes back to our participants. We return all of our earnings back to our participants, and so that allows them to get outside performance over time. And so within our company, we serve the 403B market. We've done that. That's a nod to our heritage. We will continue to do that. We see that there's tremendous opportunity to make sure the people that are helping and serving so many millions of Americans, whether it's higher ed and healthcare, can feel comfortable and confident about their retirement plan. But we're also, in partnership with Naveen, taking that benefit into the 401k market so that companies can add insurance into their allocation, and we're very excited about that. And of course, with respect to Naveen and their investment strategy, we do a lot in alternatives. So think about it as 85% of our general account is fixed income, 15% can be alternatives. And so that allows everyday participants through our general account to have access to alternatives, to have access to real estate, infrastructure, farmland, et cetera, PE, in a very safe way to generate more alpha for them. But the most important thing is that for us, it is liability driven. We want to make sure that we're investing in a way that will give them the performance and accumulation, but give them the confidence and decum that they will have income that they won't outlive and that we will be there for them.
Going back to the crisis, something that you proposed in an op-ed you wrote a couple weeks ago for the New York Times is more of a public-private partnership, more engagement with policymakers in the face of this crisis. Here we are a few weeks into a new administration, a new Congress. How optimistic are you both about the appetite for that by the new president, by that Congress, and the level of engagement that we've seen so far on in retirement issues?
Yeah, the good news is when you're talking about retirement, it doesn't matter if you are in rural America, urban, suburban. It's not a blue state, it's not a red state issue. It absolutely is an American issue that we can all relate to. And so I am optimistic. And the reason why I'm optimistic is that the policy that we have been able to achieve over many years as an industry have been bipartisan. It did not matter who was in office. It did not matter what the ratios were between Democrats and Republicans. It was an issue that everyone came together on. And so I'm looking forward to us continuing to tell the story about how important retirement security is. I'm excited about some of the progress we've made with the Secure Act to make it easier for people to have access to retirement. And so that conversation will continue. We're looking forward to engaging with the new administration and talking about how do we continue to make sure that more Americans can have access to a secure retirement, and how do we make sure that by doing that, that can put less burden on Social Security. By doing that, that puts more money to work so that the caregivers, children are not having to carry that burden. And so I do think that it will continue to be a bipartisan issue, and it is so important. We cannot close this retirement gap without private-public partnership. We have to have good policy, and we have to make sure that we in the private sector are doing our part to educate our employees, to make sure that the plans are designed so that people can have access no matter where they are within their employee base, whether they're senior executives or the people that are on the front line or working in the mailroom, having plans that are designed in a way where you have education, in a way that it has exposure to equities, bonds, and insurance, and having great policy so that more people can have access, to me, is the job to be done. And it is something that has to be done in both private and public sector.
I just want to turn to how you're navigating this moment. And you and I last spoke, it was a few years back during COVID. I did a piece on Black Wall Street and the Tulsa Race Massacre, and I asked you just about the long legacy of that. And we got to talking about DEI, got to talking about how you prioritize that within the company. I think you said it was a cornerstone of what TIAA has done. You, I'm sure, have paid attention to the recent conversation about that. Has it changed notionally the way that your company approaches these issues? What do you make of companies that have, in light of this increased scrutiny, stepped back from some of the commitments they've made before?
Yeah, I mean, I'll speak to it through the lens of TIAA and through the lens of me being a CEO. You know, I think that for us, our values are very clear. You know, and our values go back well over 100 years, and that will continue to remain. I've always said that talent is created equally, opportunity is not. And so if the objective is to continue a pursuit towards meritocracy, knowing that we started with exclusionary practices and not having everyone have access to entering corporate America, if the objective is excellence, if the objective is to make sure that we can cast the widest net across our country to attract the very best talent, to develop that talent, and to make sure that that talent stays, then the outcome will continue to be a diverse workforce, because I do believe that talent is there. And so for us, we will absolutely comply with every law, every regulation to the highest standard. And we also realize that there is a need for more talent. We also recognize that there are jobs to be done across our workplace to make sure that everyone feels that they can have access. And when I say everyone, I mean everyone. And so when I think about the opportunity for us, I think the opportunity is to stay focused on our values, to stay focused on making sure that we can cast the widest net across our country, and that when people enter the workplace of TIAA, they wear one jersey, that's the TIAA jersey, and they're very aligned with our mission. And our mission is to ensure that millions of Americans can have a secure retirement. And I believe that if we stay focused on that, navigate whatever the environment is, always, complying to the highest standard, the outcome of talent will be a diverse workforce.
So just to be clear, when the president says last night with the sweep of a pen, he's ended DEI in government and in the private sector, nothing has changed yet in terms of your
we're
policies.
Always going to understand what the president of the United States is requiring for companies, and we'll comply. But what has not changed is our commitment to talent. What has not changed is making sure that we cast a wider net. And if the president is very much focused on excellence, then we are well positioned at TIAA to continue to make sure that we do just that, while making sure that we comply to any standards, any law, and any regulation, and we will absolutely do that.
You're in this kind of rarefied position. I think like the head of CalSTRS is probably in a similar one, where you're able to exert influence on the companies on whom you invest. You can make your opinions known about corporate board composition, for instance. Is that something that you continue to do, continue to prioritize, and does that stand to change with what's happened over these last few weeks?
Yeah, I think, clearly, making sure that we're navigating the environment and what executive actions, executive orders, laws, et cetera. And like I said, we'll make sure we do all of that. But, we're investing in thousands of companies. And it is important for us to understand who the company is, what they're about, what is their philosophy, what is their strategy, understanding their leadership. And so that won't change. If there's things that we have to edit, we'll navigate that. But as an institutional investor, it is very important where we're deploying our participants' money. We want to make sure that we're doing it well and that we understand the companies that we're investing in, so that our portfolio managers can have as much information as they can to make very sound decisions about the overall investment strategy.
You oversee this huge company that has its hand in so many things, and obviously you have to interface with regulators as well. Are you worried about the state of regulation in this country, that you have to interact with them at the state level, the federal level? Do you worry about the cuts that we're seeing in terms of the products that you offer, this broader conversation about what people have when they retire?
Well, the good news is we have a range of solutions, and that hasn't changed. So we haven't seen any impact there in terms of our investment strategy, in terms of what we're here to do. As I think about regulation, I think clearly the president's been clear in wanting to have some deregulation, and that will be a positive thing for companies. But regulation is good. You want to make sure that, we're in a regulated industry. We need to have sound regulation. Clearly, if there's opportunities to improve, the president's been clear about wanting to do that and what that can unleash in terms of companies and their earnings. But I think the most important thing is, one, for us, making sure that we're clear on what we're here to do, which is provide a secure retirement for millions of Americans, understanding the regulatory landscape and whatever laws that gets passed with the president and the new administration, and adhere to that. But never lose sight of the main thing, which is to make sure that we have sound investment practices, making sure we continue to attract the best talent, and make sure that we deliver on our retirees. Whatever the regulatory environment will be, we will navigate that. We've been around for 100 years. We've seen the highs, the lows, and everything in between. But what hasn't changed, regardless of the environment, is delivering for our participants, and that won't change, regardless of any shifts in the overall environment.
So last question, I'm curious how you were thinking about the economy, thinking about markets today. We lived through a lot just in the last 24 hours with the imposition of this trade war. How are you thinking about that level of uncertainty and what it means, bearing in mind that you're not dealing with investors who have a very short-term time horizon? They're looking out longer.
Well, you just said, I think the operative word is uncertainty. I think there is a lot of uncertainty in the marketplace, which is causing consumer confidence to wane. If you are a participant of ours, you're looking at your portfolio and you're seeing a lot of market volatility. When we think about tariffs, there's a lot of questions. Will it stay? What will it mean? Clearly higher costs for everyday Americans around gas, around food, around purchases of auto loans, burdens everyday Americans. But it's not just the tariffs, right? We still have the geopolitical uncertainty. We have questions around the labor market with respect to immigration. We have an aging population exiting the workforce. So there's a lot of considerations. Interest rates, what will happen? Will we get to 2% inflation? Will interest rates drop? We're seeing a little bit of movement in the 10-year today. And so there is a lot of uncertainty. I think the most important thing that we tell our retirees is exactly what you said. This is about your retirement. And so when there's market volatility, the most important thing is to take a breath. Talk to an advisor to make sure you get sound advice, restate what your objectives are, what your time horizons are. Maybe there needs to be a rebalance of your portfolio to make sure you're navigating turbulent times, but stay diversified, stay invested, and make sure that they're getting sound advice so that they can feel confident about their retirement plan. And for us, making sure that they feel confident about our overall investment strategy and what we're doing long-term to make sure that they can have confidence that income will be the outcome for them. But there is a lot to navigate, as you said, and a lot of uncertainty.
Very quickly, I said at the top, it's easy to feel pessimistic or despair about this retirement crisis. Are you optimistic it can be solved here in the coming years?
Look, I think as leaders, we must be optimistic because we're the ones leading. And when I think about retirement, I do think that there is opportunity. As I said, this is a bipartisan issue. Sound policy matters. And when our team and when I am in D.C., people want to talk about retirement, senators, congressmen on both sides of the aisle. And so I'm optimistic that that conversation will continue. I'm optimistic that companies will continue to make sure that they're looking at their retirement plans, that they're asking ourselves questions. Are we educating our workforce? Do they understand the benefits that they have? Are the benefits accessible to everyone, and is everyone taking advantage of it? I am excited about the investment solutions, the products that we're rolling out and we're designing to make sure that it can be in everyone's plan, not just the 403B market, but the 401k market. And I'm optimistic that with sound policy, more Americans can have access to a dignified retirement. More Americans can accumulate earlier and be able to have confidence. There's some real headwinds. Social Security is a headwind. An aging population and the stress of that is a headwind. But ultimately, I think that this is something that we can do more. And I think this is something that we at TIAA are committed to doing just that. So I have to be optimistic.
Thasunda, thank you very much.
Thank you.
Appreciate it.